All right, welcome back to Stock Tricks with Nick for this week's breakout watch list from May 23rd to May 27th. In this video, we'll be covering the top setups going into next week. All the stocks on the list either have strong fundamentals, technicals, or volume clues that hint at a larger move. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. So if you guys enjoy the platform, there's a link in the description below. Going through my weekend routine, there was one clear group of stocks setting up, and that's oil and gas. So we'll be going over those 8 stocks relatively quickly while taking our time with the others. With that said, there's obviously a lot of charts to go over, so let's get into it. We're going to start with the oil and gas names, but there's going to be timestamps in the comment section so you can go to each setup that you want to see. The first stock that we have is AR. This is an oil and gas exploration. That's the 9th strongest group out of 197 according to MarketSmith. So obviously that's an A+ group strength rating. It does have a B accumulation distribution, meaning many of the heavy volume days come on up days versus down days, the stock's being accumulated, not distributed. And it has an overall composite rating of 98, along with an individual relative strength rating of 99. It's the strongest stock on relative strength within the group and 19th out of 58 on a composite basis. You can see this has been in a nice strong uptrend, first respecting that 21 EMA, then respecting that 8, the green line up through here. From there, we kind of peaked at $37, came back into the 21 EMA, still closed over that, but eventually, as the market dampened and worsened, we pulled back to the 50-day moving average. That's this red line. We got supported, bounced back above all the key moving averages, and the last 3 trading days, Wednesday, Thursday, Friday of last week, all really tight action, closing right around $35. So what I would want to see on this is a break over Friday's high, $35.91, call it $36 as a potential entry point. Next, we have BSM, another stock in that oil and gas exploration group. So A+ group strength rating, has a B+ accumulation distribution, but a little bit lower, 93 overall composite, along with a lower 97 relative strength rating. This one had a nice consolidation area between 970 and 1275, eventually breaking out and putting in higher highs, higher lows. We did have this pullback day that closed back above the 21 EMA, but as you can see, as the market worsened, this started to tighten up. You have the 8 and the 21 EMA basically going flat. The 50-day is still rising, and we haven't tested that just yet. So if the market continues to worsen next week and we pull back into the 50-day moving average, that'll be a really key area to hold. But we have a nice kind of downtrend line to work with. So breaking over Friday's high, 1529 is a potential entry point for BSM. Next, we have EQT. This is probably my favorite oil and gas setup going into next week. This is in a slightly different group, slightly stronger group, 5th out of 197. So A+ group strength rating, B accumulation distribution, 99 overall composite rating, along with a 99 individual relative strength rating. Much more power off the low here after this consolidation area. We went from 1920 all the way up to 4550. Very strong move. From there, we pulled back to the 21 EMA, bounced, pulled back to the 50, bounced exactly on the 50-day moving average on May 10th. From there, we popped back over all the key moving averages. And then again, the last 3 trading days, really tight action, at least compared to the most recent price action. Closing back above 40 the last 4 trading days. Nice to see there. If we open weaker on Monday and we come back into 40, I want to see that area get respected. You see the low of the day was $39.99 on Friday, and that was a pretty volatile day in itself. So if we can pull back and start a position closer to 40, then we could use the 21 EMA and the low of Thursday as a potential stop loss. That would be around 39.16. So you're only taking about 2.5% risk on that if you can get your entry close to $40 for EQT. Next, we have ESTE. This one isn't an A+ setup by any means, but I kind of added it to the group because we have so many oil and gas names that are showing relative strength, showing quality setups. This one hasn't shown the power that many of the other oil and gas names have shown, so it wouldn't be my go-to, but it does add confluence to the group setting up. With this, looking for a break over Friday's high, 1521. Going to a weekly chart, you can also see like this hasn't really been going like the other ones, like EQT has. Nice, really strong breakout there. So ESTE, one to kind of watch to see if the group is getting going itself, but probably not one that I want to trade. Next, we have FLNG. This is an oil and gas transportation pipeline, so 13th strongest group out of 197. This one has a little bit less average volume, only 570,000 shares traded a day. So if you're looking for a more liquid stock, this probably is not it. It does have a accumulation distribution, B+, 95 overall composite rating, and a 98 individual relative strength rating. Out of 55 stocks, it's number 1 on earnings per share, 4 on relative strength, and number 7 on overall composite rating. This one had a nice move from about $20 to $30, a nice 50% move. Got a little bit extended. We gapped down, flushed to the 50-day moving average, a little bit of market pullback there. Same with the most recent action. This one actually undercut the 50-day moving average. So again, if I'm looking at A+ setups, this is not an A+, but it does give confluence to the group showing relative strength. From there, we pop back over the key moving averages, settle down right into the flat 21 and the 8-day EMAs, looking for a break over Friday's high, 28.79, and managing our stop loss against the lows of the last 3 days and the 50-day moving average. Keep it around $27, just under 27. Next, we have GLNG, also in the transportation pipeline, 13th out of 197, but does have a little bit more average daily volume, about 1.7 million shares traded. A+ group strength, B accumulation distribution, 80 overall composite rating, along with a 99 individual relative strength rating. You saw this had really nice power going from 1079 all the way to 2660. From there, we pull back to 2115. You see the 50-day moving average did get undercut once, twice, 3 times there. But since that happened 2 weeks ago, since last week, we bounced back over all the key moving averages. We actually had double inside candles on Thursday and Friday, closing over all the key moving averages. So as this is tightening up, one thing to point out is it does have earnings coming out on the 26th. So if you don't want to trade right ahead of earnings, this is probably not the stock for you, but another one that gives the group confluence. MGY, similar to ESTE, hasn't had the power as the other oil and gas names have, but is also tightening up. You got the 8, the 21, the 50-day moving average, all right around the same price. Looking for a break over 24.83 or $25. Nice round number there as a potential entry point to get this off. And finally, we have OXY. This has been the leader in the group, has 31 million shares traded today, so a very liquid name. This is an oil and gas exploration, 4th strongest group out of 197, A+ group strength rating, A accumulation distribution, 99 overall composite rating with a 99 individual relative strength rating. Looking at the fundamentals below here, you have earnings per share rapidly increasing, sales increasing, after-tax profit margins improving, doing all the right things. Within the group of 15 stocks, it's number 5 on earnings per share, number 1 on relative strength, 1 on accumulation distribution, and 1 on overall composite rating. So we're stacking probabilities in our favor. This is a strong stock in a strong group. And it already kind of had this move out from 60 right below 70 here. But since then, we've had 3 days where we're pulling back on lighter than average volume. You can see volume drying up as we come back into the 21 EMA, which we bounced exactly at that point on Friday. So if the market can continue to show weakness, this comes back into the 21 EMA, I would want to start my position as low as I can in here and then manage my risk against 60 or the 50-day moving average, which right now is at 59.08. This is OXY. All right, those were the oil and gas names. Now we get to the others. So this is EXFY. This is an IPO in computer software financial. Obviously, tech names have not been doing well. This is 175th strongest group out of 197. It's got a B- accumulation distribution, D- group strength rating, 37 overall composite, 18 relative strength. Nick, why are we talking about this stock? It seems very poor. We're talking about it because we've seen massive volume come in off the lows here when it did report earnings. And it reported negative earnings per share, but an increase in sales and an increase in after-tax profit margin or profit margin improvement. From there, we saw massive volume off the lows. We moved from 1373 area all the way up to, let's see, what was the high here? 2241. Got a little bit extended, and with that market pressure, we pull back into the 50-day moving average and start to consolidate. Friday's candle was beautiful, a nice inside candle in the upper half of the previous range and building under $20. The high was 20.05. So I want to go into a 30-minute candle to show this a little bit better. We have this downtrend line that we could work with. That actually broke on Friday right at the end of the day, but I didn't want to be building exposure going into a weekend when the market wasn't acting right. So this is one that I want to play coming into next week. If we pull back again and check this $19 area and then get out, then you can get a lower entry and protect yourself against this low, or maybe even 18. That's a little bit wider of a stop, more than 5%. I wouldn't take that. I want to keep my stops very tight. But this is one that showed power off the lows, started consolidating, even when the market was really pulling down. This was fighting that trend. So the relative strength recently has been basically in a straight line up. So break over 20, potential entry point for EXFY. Next, we have GFF. This is in building construction, 118th strongest group out of 197. So the C group strength rating, A- accumulation distribution, 98 composite rating, along with a 95 individual relative strength rating. This is another stock that came off the lows, very heavy volume. We went from 18 to 30 in just a couple weeks with Very strong, heavy volume there. It did report earnings on this gap up. We had earnings per share growth 191%, sales up 36%, after-tax profit margin improved slightly as well. This created an HVC, high volume close area. Let me change this to tracking pen. Right on 3060, no, that's the high. Sorry, right on 3013. From there, the market had its trouble last week. So I was surprised to see this didn't actually fall apart. We tried to push higher the next day. We actually did push higher, closed right at the high of the day. But on Wednesday, we attempted to move higher, put in higher highs, but eventually came back, closed under 30. Then consolidation on Thursday, consolidation on Friday, closing at the high of the day, and was positive when there was a lot of volatility in the market. So I'm looking for a break over this high volume close at 3013 as a potential entry point, especially if we see market pressure lift come Monday, Tuesday. This is one that, going to the weekly chart, you can see it's trading right along the previous resistance area, now turned support. So as it came in a little bit, it found buyers at that area now, which is showing good support. Now we just got to get out of this $30 range once the market pressure lifts. Next, we have GNK, and I'm going to throw in ZIM right as I'm talking about this because they're both shipping stocks. I did take a position on both on Friday. Got stopped out of ZIM, moved that money to GNK because it was holding up a little bit better. But transportation shipping, 11th strongest group out of 197, so A+ group strength rating. This has a D+ accumulation distribution. I'm not sure about that. I guess some of these heavier volume days most recently have come on down days, but I don't think it looks as bad as D+, but 97 overall composite rating with a 96 individual relative strength rating. Fundamentals are off the chart strong. Within the group of 28 stocks, this is 11th strongest on relative strength, 13th on earnings per share, and 12th out on overall composite rating. So with this, we did crack under the 50-day moving average. That's starting to flatten out, but you have the 8, the 21, and the 50-day all right around the same spot. And this kind of looked like a head and shoulders, looked like it could dip lower, but that's why we buy on strength, not on weakness, as it's breaking under key moving averages. So on Friday, I took this with a break over Thursday's high. It did push out, was up about 4%, and then we had that intraday market pressure pushing it down, and it never really recovered the highs that it saw early on in the day. But with this, if we continue to see pressure pulling back into this 50, or pulling back into the 8, the 21, and the 50-day moving average, right around $20, $22, that would be an area where you could start a position and then keep your stop a little bit tighter with stop at 2170 or so. So that's GNK. Now we'll go to ZIM. This had been the leader of the group. Eventually had a little bit of problems here, breaking under the 50-day moving average, but eventually found its footing at 48.21. This is after the dividend got paid out, pushed back over all the key moving averages, and now we're kind of snapping back and forth over both of those. Right now we're above all the key moving averages, and the low of the day bounced at the 50 and the 8-day EMA. So with this, if we pull back again into that area on market weakness, that would be an area that I would want to start a position or build into more of a position. Or if we take out Friday's high, but ideally we see kind of a pullback into those moving averages to tighten up the range a little bit more before we get in. Next we have HRB. This is H&R Block. Kind of surprised to see this on the list, but this is the type of volume that you cannot ignore. Very clean move from 25 up to 35. And then with that market pressure pushing down, this really didn't give up too much of its move. We went from, let me track this, we went from $35, right around $35, to a low of $32. So about a 10% pullback, a little bit less than a 10% pullback. And we did so on lightning up volume. Really nice bull flag here. If we go to the weekly chart, you can see there's no overhead resistance. We're pulling back into the previous top from September 17th, 2017. So no overhead resistance. Everyone in this stock at this point is making money. So you don't have additional sellers trying to get out for break even as it rallies, like you'll see with many of these beaten down stocks. So very large volume coming off the lows, starting to tighten up. I would like to see the 8-day EMA come and provide support before I get involved, because I don't have the intuitive feeling that H&R Block is going to be some massive winner in the next bull cycle. So I want to give it some time to digest these gains. So far, it's doing nothing wrong. Wanted to put it on your radar, but probably not one that I would want to trade off a 5-day EMA, something like that. Next, we have ON Semiconductors, and if you follow me on Twitter, I've been posting about this pretty frequently. I did try to trade this last week, got stopped out, but it's still setting up as one of the best semiconductors in a group that started showing relative strength last week and then eventually gave that up Wednesday and Thursday. So with this, 112th strongest group out of 197, C+ group strength rating, I understand that, but 96 overall composite rating with a 92 individual relative strength rating. If you look at other semiconductor names like NVIDIA, it's got a relative strength rating of 31. AMD has a relative strength rating of 52. GFS, I've seen that posted on Twitter, relative strength rating of 91, which is solid, but ON has been showing the best relative strength that I've noticed. Very strong fundamentals, earnings per share improving, sales improving, after-tax profit margins improving. And you see all four key moving averages, the 8-day EMA, 21 EMA, 50, and 200-day, all right around the same price. I got stopped out when we broke under $55 on Friday. You could see because we broke under the 200-day moving average. I didn't want to hold on hoping that we would snap back, but we did get a snap back. So now we're putting this back on the radar. We always want to keep our losses very, very tight so we can take multiple small losses and then get situated for a nice large winner. With this, looking for a break over Friday's high, 57.65, or if the market's extremely weak and this is just coming back into that $55 area with the 200-day moving average, then we can play against Friday's low there. Got two more for you. This one is TMDX. This is in medical products, 130th out of 197, C- group strength rating, C+ accumulation distribution, 54 composite, but 98 individual relative strength rating. And really, that's what I want to talk about here. If you see, we had a nice move at $10 and we got supported. The low of the day was at $10. So that's showing a little bit of institutional demand, nice round number being supported. We push all the way up to $30. So from 10 to 30, that's a very strong move. From there, we consolidate a little bit back into the 200-day moving average on the 12th of May. From there, we push again, consolidate a little bit more, and we have an outside candle on Friday after we took out the lows from the pullback and then closed back above Thursday's high. So this is another one that you could have gotten involved at the end of the day Friday as it took out Thursday's low. I wasn't trying to build exposure going into the weekend, but it is a name that I want to keep on my radar now. So if we take out Friday's high, $29.09, just call it $29, it's a potential entry point. The stop against the low would be a little bit wide, so probably keeping that at a 3%, 5% stop there for TMDX. And finally, we have UDMY, UDMY. I've also been posting this pretty often on Twitter. This is in computer software, education, 191 out of 197, E group strength rating, C+ accumulation distribution, 12 composite, 18 relative strength. Nick, why are we talking about it? Very similar to EXFY. We came off the lows from 966 to 1267 on heavy volume here. And from there, we've really started to tighten up and build this pivot at 1250. You can see if we go, not weekly, we go into a 30-minute candle. We did attempt to break over 1250 once. Then we failed with the market pressure pulling back in. But now we're putting in higher lows, higher lows, higher lows, higher lows as this gets closer and closer to that 1250 pivot. Going back to the daily candle, you can see we're above all the key moving averages, and the 8, the 21, and the 50-day, while below those prices, are now starting to curl up, forming that launch pad. So looking for a break over 1250 as a potential entry point for UDMY. Just to note, this does trade on less volume, about 480,000 shares a day. Sometimes it's even less than that. So keep that on your radar. If you need to trade more liquid stocks, probably not the one for you. And that's gonna be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list every Sunday along with other trading videos. Big thanks to the sponsor MarketSmith. If you guys enjoyed the trading research platform that we were using in this video, there's a link in the description below that you guys can try it out yourselves. If you want to hear more from me, follow me on StockTwits and Twitter. Those are the two platforms I post the most, but also building on TikTok and Instagram. Have a great week, and I'll see you guys in the next video.